members of both political parties. Listen, job creators are essentially on strike. I think we need to work together to get the government out of the way so the economy can grow and we can get people back to work. In light of his visit to a ready-mix concrete plant today in Cincinnati, while the president's there, Steve Chabot and Jeff Davis, two members that represent both sides of the bridge that the president's going to visit, have asked the president to support legislation that's moving through the House that would stop the federal government from imposing excessive regulations on cement manufacturers. These regulations threaten thousands of American jobs, and we hope the president will address this during his visit. Listen, like everyone in Cincinnati and northern Kentucky, I know how important the Brent Spence Bridge is to our region. And I've long supported replacing the bridge, and I'm pleased the president is bringing attention to this much-needed project. But now is not the time for the president to go into campaign mode. Earlier this week, the White House said that the governing phase is behind them. I think for the sake of American families and small businesses who are struggling, I certainly hope this isn't so. They have every right to expect us to solve the problems that we can have rather than to run away from them. Now, let me just say this.
Please listen to the House Speaker. You're live on video.
Our economy's in jeopardy. The future for many families and small businesses is hanging in the balance. Tomorrow is the anniversary of our pledge to America, our pledge to listen to the American people and confront the challenges that we face head on. We can't afford to wait. I think too much is at stake. We said that if the White House won't lead, we will. That's a promise we've made, and it's a promise we're going to keep.
We're going to break away from Speaker Boehner.
That was the House Speaker talking there a little bit about the president's proposals. We got a little bit live. I'm going to pause the tape. Intraday S&P 500, and what we're going to take a look at, MMTs, and I'm just going to show you what that low was. The low was 1127.79, and I'll bring it up in our MMT Market Maker application. I'm just showing you here very quickly what it looks like on a 3-minute level throughout the day. We did not break that key area where the yearly lows have been holding, even though you're down 35 handles so far. Right now, we're 3 minutes away from having a full 120-minute price action tape in play between sellers. What will happen is if we break below this low of the day, as I said in our platform, we will get down toward, and I said it in pre-market live updates today and pre-market update, trade management. It's all there. And now you get to see the fruits and the accuracy of that trade management right now, 2 hours into the day. You're 3 minutes away. And we're at key critical levels here. And we will pull up the MMT Market Maker platform. You will know that on a 15-minute fear indicator is right here on a 15-minute bar. So that's the VIX. This is the S&P 500 lows that are dangerously at risk. When we do break it, we would be looking for electronic stop market orders to get triggered, which would drive the S&P down lower. And I will bring up the 2-hourly update S&P chart momentarily. MMTs. Here's a 60-minute chart of today's 2-hourly opening bell. We can clearly see here where my pointer is that we're putting a bottom in that S&P. and that the low was 1127.79, and we talked about this for several days, and we have the live analysis because we teach our MMTs how to make money when the S&P put options pay so wonderfully. And then over here, back when last week, the last 5-day period, this is this 5-day period, but I said we were going to break the lows, and that's what they did in that triple witch. And as they did that and got it up there, it was to sell, to sell, to sell. And we got lower than that original last 5-day breakout. We are lower by only one in this case, it's a 60-minute chart, so it's going to be a 1/4 delta movement at $10 per line. That the SMF price action line has already been calculated before the market. Now it's what's going to happen between the weighted buyer and seller and everything that you are taught MMT. And that when we looked at the daily, that we had to break below the daily bars. S&P 500 daily chart. How nice. Here we are on the S&P. We went over this day in, day out, week by week. How do I get my put options when it fills up here? And why do I want to be long here when no one wanted to be long? This was the previous 5-day option triple witch expiration. Walk the dog 5 days and come right back down here. And we haven't broke these lows on the S&P. We got this is a daily double diamond here with these diamonds. And if we break below these diamonds here on a daily level, then we could come all the way back down to this lower teeny line. Each half delta line for today is $20.05 each line. And you're down you're down one delta. And one delta is $40. I'm sorry. $40.10. And you're at the lows. And you're not going to get S&P 500 analysis anywhere else better because this is not a lagging market maker platform. No. No. And you're at a multi-year calendar 2011 low. Again, within the original bottom process that we cover and trade on a daily compounded, live trading, daily compounded, and I want to go higher, I want to go down, I rally up in the triple witch, and it comes and gives it all back. It broke that delta line here. It broke that double, triple delta line where it bounced, but it still bounced in the triple witch. They walked everybody to the slaughterhouse, and you can see the yearly calendar lows in the daily S&P market maker application. Doesn't lie, doesn't have an opinion, doesn't have anything except the weighted price action between the compounded buyers and sellers within 500 stocks and the S&P 500 index, and the leaderships are selling down. It'll be the leadership stocks in the S&P 500 that will also hold the triple diamonds support lows. Live analysis is the very best because we're that accurate. And we're going to see if we break these half bars, as we've always said, within the calendar year bottom up and bottom down process. This is a daily gap down as well to that line. And it's the daily follow-up. The time, 8:39 a.m. Pacific Standard Time, 9/22/2011. And the S&P is at 1134.16 right now, down 32.60, taking a nice haircut of minus 2.81%. And we are right now 2 hours and 9 minutes of the opening bell buy and sell transaction in the S&P 500. And I will conclude the S&P 500 update with very, 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 very bottoming process on 60-minute market maker platform. 60-minute market maker platform. That means that this very big 1, 2, 3, 4 1/4 deltas, which equaled minus 38.97 negative, with the 0.97, almost one full delta on the S&P. And we're finally putting a bottom in, and you can see the 60 minutes. We're not 10 minutes past the 60-minute hour. This is what the bottom looks like on a 60-minute level. And it's important that you have the tools to understand what this bottom is from that big sell down, and that this 60-minute bar better be above that diamond, and that the body of the next 60-minute closing better take out all of where the wick sold down. You have to fill this part up here. You're going to test this half bar intraday on a 60-minute level, and that's 1146.17. And right now the S&P just so happens to be about $13 below that half bar. This is a 60-minute, and this is the bottoming process using the 60-minute and the daily chart. And when do I break the lows? Right now, if the S&P was to break below 1126, we start working our way down toward that 1101 handle. And if we break through there, well, we already know from many, many days of analysis that we've already completed and done. They're all live on SMF. You start getting down around, you start hitting that 1085, 1092 area on the S&P. If you break that 1101, or if you hold that yearly low again within the overall range bound trade management here in live between buyers and sellers. This is a live market. This is a real SMF market maker application. You can see the long debits, you can see them short debits, long, then short, then that great move long again. But then again, it's coming right back here, and it's challenging all of it right here on this 60-minute bar right here. It's right there on that teeny line. Let us not be in denial. And that if we break that teeny line, then we're going to go down in here where it all started. We traded that long, had to come out, it failed. It was time to go long again because it had held it. Everything, you were there. They're all live trades. Hey, I love calls that way. I love puts this way. I love to be in calls that way. Hey, we might be starting it all over and be able to buy calls up and out of the money again. It's going to be all dependent, though, on how we hold that 60-minute teeny line here now on that 60-minute and what that daily looks like. And I can tell you now that the previous half bar right here, 60-minute half bar, is at 1135. Right here. That's this one, okay? And this one is going to have to hold support on a 60-minute level and build a base, okay? This is the longer, broader, and this is the 52-week low showing on a 60-minute level of a major S&P 500 calendar year, 52-week low, 2011 calendar year. And what true price action volatility, long and short, is really in the tape. And that price action is always the king, because price action doesn't have an opinion, it doesn't have media involved, it doesn't have headlines, it doesn't matter. What matters is that price action is king weighted between buyer and seller. If I'm long, I'm long. If I'm short, I'm short. I just know how to be an MMT market maker in all of these cases. And what's going on down here. And the live trade management with live market hours is here and now. S&P 500 here and now. You are now 2 hours and 15 minutes into the opening bell on the S&P 500 analysis, with the S&P hovering right around 1133 right now at minus 2.86% in 2 hour and 15 minute price action.